Hi, Dom Netcher. So today I want to talk about the big news in the markets this week, and that is the Federal Reserve's decision on interest rates. It's widely expected they're going to raise them by 50 basis points or 0.5%. So we'll see what happens, see how the market digests it. There's been a lot of chatter out there around, are we going to see a big recession, huge stock market collapse? You hear all these things out there from different people. I like to think of it as, are we living in the 1920s or 1970s? And I think we're closer to the 1970s. One of the main reasons is the government, the markets, the kind of regulatory structure is much more mature now than it was then. But also I'm just optimistic that there's enough of an economic base in place to withstand this big cycle change. There's no doubt about it. We're living in a bear market, tough environment. It's probably going to be that way for the next year or two. But like I said, if there's enough in an economic base and we get closer to a real kind of financial system with these interest rate changes, I think we can see through it to the next cycle and see what happens there. So if you're an investor sitting there with cash to invest or reallocating, you seem to be very careful, more prudent, say, than you have been over the last few years. And you want to look for companies that are cash rich, very strong business models, sustainable dividends, things like that, high quality. That's what works in an environment like this. So you guys take care.